Okay, welcome. We are going to discuss question 3. This is May CPA August 2021 FA Section 1 paper. FA Section 1 paper. So, Financial Accounting Section 1 paper, and it's August 2021, question 3. And it's a question on manufacturing profit and loss and appropriation account. So this is the question 3. This is the question as it is as gotten from the KASNEB past paper. So let's look at it very fast. The following trial balance was extracted from the books of Alfajiri Manufacturers Limited as at 30th June 2021. That is the trial balance. You can see all the information there: freehold property, plant at cost, accumulated depreciation, motor vehicle at cost, accumulated depreciation, like that, raw materials, sales, sundry expenses. You have all those expenses all the way. You don't have the total. Yeah, the total is somewhere there. You have share capital. This is a continuation of this trial balance. General reserve, 44,000, interim dividend, cash at bank. Yeah. The total for the trial balance is 394,819. You can see debit side and credit side are balancing with the restricted zeros. So we'll go through the additional information before we embark on what is required of us. So number 1, freehold property includes land at a cost of 15 million. The other amount is the cost of buildings. Buildings are to be depreciated using the straight line method over a 50-year life commencing 1st July 2020. This expense is considered to be a factory overhead. Depreciation is to be provided on a reducing balance basis as follows. So we have the depreciations. Only plant depreciation is charged to the factory. The other depreciation charges are considered administrative in nature. Allowance for doubtful debts is to be adjusted to 8% of the accounts receivable. Yes, we'll do that. The following expenses are to be apportioned in the ratio 4:1 between factory and administrative overhead. So we have those expenses clearly shown. An amount of 6 million included in the factory wages account is the factory manager's salary. Then the directors wish to provide for a final dividend, which will bring the dividend for the year up 5 shillings per share. The debenture interest for the current year has not yet been paid. Some finished goods which cost 541 have been sold to a customer at an additional profit margin of 57,000, but the customer has indicated that he intends to return them since they are not what he offered. This sale was a credit sale and has been included in the accounts receivable. Okay, we'll work out that when the right time comes. As of 30th June 2021, light and heat, insurance, and these are there are some adjustments, and then inventories for both raw materials, work in progress, and finished goods. So what are we supposed to do? Come up with the manufacturing account for the year ended 30th June 2021 and the statement of profit and loss for the year ended 30th June 2021. Okay, so we don't have the statement of the financial position, so we'll just have these two. This is even fair for us. So let's dive the question. This is Alfajiri Manufacturers Limited. The books are required as of 30th June 2021. 30th June 2021. So 30th June 2021. So we go. Alfajiri Limited. We always start with the heading. So we'll have Alfajiri Limited. And then say manufacturing account, Since they want these two books different, you can see the first part is asking for manufacturing account, then the second part is asking for statement of profit and loss. We'll do the manufacturing account first, and then say for the year ended, 30th June 2021. So you need to underline this. Then preferably let's have 3 columns, and you can choose to restrict the zeros. I think this question has generally restricted the 0, so we'll also restrict the zeros. Let's restrict these zeros of ours, and then we'll have particulars on the farthest end. Particulars will show our particulars here. So we are starting with the manufacturing account, and manufacturing account is simply what we need here is to capture the costs that are incurred at the factory level. So we normally start with the first part, which is we get all the direct costs, and there we have direct materials, then direct labor, direct expenses. When you add the 3, we have the prime cost. After prime cost, we add the factory overheads. And we will list all the factory overheads. Once done with the factory overheads, we add the work in progress. If we have the opening and then less closing work in progress, and there we'll be having our cost of goods, cost of the cost that has been incurred at the factory setup, and it's that cost that we are going to send over to the trading account, which will form part of the second part of this question. So what is expected of us here is to go straight to computing the prime cost first, and then we'll add the factory overheads afterwards. So prime cost, how do we get prime cost? Prime cost is, I said prime cost is equals to the direct materials plus direct cost plus direct labor. So how do we get direct materials? That's where we are going to start from, and we'll come straight here and start with the direct materials. So if this is direct, it has been given to us just like that on a silver plate, then it will be good to go. But in most cases, it will be hidden, so that we'll need to compute the direct materials. And how do we compute the direct materials? Simply take the opening stock of raw materials, then we add the purchases of raw materials, and of course purchases can come in with some workings, and then less closing stock of raw materials. That way we'll be able to get the direct materials. So back to the question, do we have direct materials? Check, run through the question. Direct materials, raw materials purchase return. So you see these are working on the purchases of raw materials. So this will have to include when we are finding out the raw materials. I hope you have seen raw materials purchase returns. That is very important. You have to consider it. You can see factored power, factored wages. These are now expenses that are incurred at the factory. We'll be talking about them. Okay. Inventories as at 1st July 2020. We are supposed to come up with books as of 2021. So these are our opening stocks. They are here. These are our opening stocks. So we are interested in the opening stock of raw materials. So we'll come here and say opening stock of raw materials, and for the sake of it, let's have it in the middle column. Because we are looking for let's just have it. We can have it in the middle column, or we can have it in the outer column. So opening stock. What is the value for the opening stock? It's 668.11. So you simply come here and say opening stock 68.11. Now let's have it in the middle column. It will be better that way. So 6811. Let's have it here. 6811. So that we can do our workings in the innermost column and then present our findings in the outermost column. So that is 6811. Then we'll add purchases of raw materials, So check around for the purchases of raw materials. We've already seen purchase returns. So check around for purchases of raw materials. Do you have purchases? Yeah, raw materials purchases, you have it here. So raw material purchases 183,476. 183,476. And because it has workings, we push this to the innermost column, 183,476. Then we have purchase returns, which we've already identified. Purchase returns. So 183,476, this is the figure. And then purchase returns. So raw material purchase. Purchase returns, where is purchase returns? So somewhere here. Raw material purchase returns 634. So that one we are going to less 634. If we had carriage inwards, possibly we'll also have included, but I've not seen it. So we come here 183,476 minus 634. That gives us 182,842. 182,842. 842. That is our purchases. Then we look for closing stock of raw materials. Inventory, they're already here. So inventories, closing stock of raw materials. Please, raw material, this is what happens in the manufacturing concern. So you have closing stock of raw materials, 27,851. 27,851, like that. This one we are deducting so that we can get the right figure for the direct materials. So let's get the totals here. This will be 6811 plus 182, sorry for that, plus 182,842, 182,842 minus 27,851. This gives us 161,802. 161,802. That is the value of the direct materials. Then after that, remember we said for us to get the prime cost, we'll have to add direct materials plus direct labor. So let's check around if we have direct labor. And direct labor is the cost that can be directly associated with the product in question, what is incurred at the factory level. So check around for direct labor. Factory wages, this factory wages, this will come in as the direct labor. 21,670, 21,674, but I think at some point we had, sorry, these are marked the wrong one. At some point we were talking about the salaries of a general manager that were included in that. An amount of 6 million including the factory wages accounted for factory manager salary. So this is not, this factory manager does the overall supervision, so it's an indirect kind of an expense. So the number 6 will simply take factory wages of 21,674, 21,674, 21,6. You might want to do our workings from here. 21,674, and then we less factory manager salary. Factory manager salary, which we've been told is 6,000. So less that, what are we going to get? The best way, actually, if we are, because this working is supposed to be shown in the outermost column, the best way is to have this here in the center column, 21,674 and then 6,000. That way it gives our work some good look. So then what are we going to have? 15,674. That is this minus this. Check around now if we have direct expenses, any direct expenses. If we don't have any direct expense, we close, and that will serve as our prime cost. So check if we have any direct expense. So far I've not come across any direct expense, so I will assume we don't have direct expense. Yeah, you run through the entire piece of work just to make sure. So if we don't have, add the two. This will give you 161,802 plus 15,674. That gives you 177,476. 177,476, like that. And this becomes our prime cost. Prime cost. That is very important. It's very important that you get that prime cost, and then you can now proceed with the rest. So after prime cost, we need to add now the production overheads. Production overheads are basically the direct costs that are incurred at the factory level. So we'll go back again and start picking this indirect cost. So all these are not, all these discounts, accumulated depreciation on fixtures, discounts receivable, 15% debenture sales, sundry expenses. Yeah, sundry expenses may be bank charges, marketing expense, advertising, sales returns, raw materials, salaries, plant maintenance. Yeah, like plant maintenance, that one goes without saying. Plant maintenance is yeah, let's pick it. Plant maintenance, lighting and heating, factory power, of course, factory power. Factory, of course, we had the supervision, rates and insurance, bad debts, allowance for bad debts. Yeah, so we are checking on some of the, we have already identified some of these costs. I just want to be sure before we start picking them. Depreciation is to be provided on a reducing balance method. Yeah. Only plant depreciation is charged to the factory. So plant depreciation charged to the factory. The other depreciation charges are considered administrative, okay? Allowance for doubtful debts has nothing to do with this, the manufacturing account. Then the following expenses are to be apportioned in the ratio 4:1 between factory and administrative. So lighting and heating, risks and insurance, sundry expenses will have to apportion them. And then, yeah, I think that is it. Lighting and heating accrued as of 30th June. We have some accruals. Insurance, we have some accruals, and rates prepaid. We have we paid. No, insurance was prepaid. Light and heat was accrued, and rates was also prepaid. I think that is good. So we are able to identify some of the factory overheads. Remember, what we are dealing with here are not just expenses in general, but expenses which apply to the factory, indirect expenses that apply to the factory. So let's go for them, and we start with this one. I think we start with okay, let's just be metal. Okay, sorry for that. Okay, so let's proceed. We start with let's go with this order. So freehold property includes land. That one has nothing to do. Buildings are to be depreciated using straight line method. This expense is considered to be a factory overhead. So we start with that. Depreciation, buildings. We start with that because it has been clearly stated. So we start with depreciation and specifically buildings. Depreciation on buildings. So what are they saying? That buildings are to be depreciated using straight line method over a 50-year life commencing 1st July 2020. So this is straight line, so we'll just divide by 50. The value of the buildings, cost of the buildings, divide by 50, and we get the annual depreciation. Then that is what we are going to charged the factory overhead, because they have said this expense is considered to be a factory overhead. So let's come back here. Freehold property at cost. Freehold property at cost is 25,000. That is the value. But again, in our note number 1, they said freehold property includes land at a cost of 15 million. The other amount is cost of buildings. And it's buildings that are to be depreciated. So we take 25,000 minus 15,000. Remember the restriction of the zeros. This leaves us with 10,000. And it's this 10,000 that we're going to divide with 50 years, because they've said the building will have a useful life of 50 years. So this gives us 2,000 annual depreciation straight line method. Is it 2,000? No, it's 200. That one goes that, so it's 200. So 200 shillings annual depreciation. So we will basically come back here and say that the depreciation for buildings is 200, like that. And then we move to the next item. That's how we go about it. So we already factored, we've already factored that one, we factored that one. Depreciation is to be provided on reducing balance based on the following: plant, motor vehicle, furniture, fixture and fittings. Only plant depreciation is charged to the factory. The other depreciation charges are considered administrative. So plant depreciation, 15%. And they are charged on reducing balance. Reducing balance, it means we work with the written down value. So it will be 15% of the written down value. So let's go back. Plant at cost is 26,000. Let me just do away with this so that we can create some room. Plant at cost is, we are done with this. Let me just create some room here. So plant at cost is 26,000. Sorry, 26,000. And then accumulated depreciation on plant is 12,400. So this leaves us with 13,600. So then we work 15% of 13,600. That is the depreciation on a plant, and it is what we are going to charge, 0.15 times 13,600. This gives us 2040. So we'll come here and say depreciation on plant 2040. Plant 2040, like that. So the next thing is that is what, it's only plant depreciation that is to be charged to the factory. So the others are considered administrative. We'll go back to them when the right time comes. So let's go to the next item. Allowance for doubtful debts is to be adjusted to 8% of accounts receivable. In manufacturing account, we don't deal with data, so that is gone. The following expenses are to be apportioned in the ratio 4:1 between factory and administrative overheads. Factory and administrative overheads. So we are talking about lighting, risks, and sundry expenses. Lighting, it's here. Lighting. Then lighting, rates and insurance, and sundry expenses. Do you have sundry expenses somewhere? Sundry expenses. So these are the 3 items that we are basically talking of. The following expenses are to be apportioned the ratio 4:1 between factory and administrative. What this means is that the factory takes 4 and the administrative takes 1. So 4/5. If it's a ratio of 4:1, get the total, which is 5. So 4/5 will go to factory and 1/5 will go to the administrative side. Okay. But there was something about lighting and heating risk and insurance and sundry expenses. Yeah, it's here. As of 30th June 2021, light and heat accrued was 154,000. If it's accrued, it means we add to what has been paid. Then insurance prepaid was 48,000. We less because it doesn't belong to that particular year. Then rates prepaid 150, we also less because they don't belong to that particular year. Rates and insurance. Okay, I believe this must have been rates and insurance. Let's assume rates and insurance, because here we have been, it's actually I think I saw something like that, rates and insurance here. So I think this must be rates and insurance, so that when we talk, this one will also be rates and insurance. Okay. So before we apportion, it's very important that we factor in these changes here, which are very important. So we'll come here and start with light and heat. Light and heat. So we write light and heat. How much is the figure that was paid first? Let's start with the figure that was paid. Light and heat is 32.56. Make sure you get that figure right. 32.56. But because it has some workings, we show this in our innermost column like that. And then we add the accrued light and heat. So how much is that? Accrued light and heat is, the figure is here. Light and heat accrued 154,000. So we simply add 154 to this figure and we get the total. The total will be 3410, I think. 3410. Just trying to get this 32.56 plus 154 and 3410. Then we go to the next item. The next item is rates and insurance. The next item, sorry for that. The next item is rates and insurance. Where is rates and insurance? So we are done with that. Oh, there is a mistake here. This is now for the entire. This has not been apportioned. Remember, we are supposed only to take 4/5 of the entire cost. So that way, we may not have to do it this way. Let's change our tact and do it a different way. So we are going to take 32. Where was it? We'll change the tact. 32.56 plus 32.56 plus 154. So we'll simply say 4/5 times 32.56 plus 154. That way, we'll have apportioned. We'll have added the accrued and then apportioned at the same time. So it becomes easier. 32.56 plus 154 times 4 divided by 5. That gives us 27.28. 27.28. So we pick it just like that without necessarily going into a lot of issues. So then we go to rates and insurance. Rates and insurance. And I hope you've seen we've combined all of them together. So this one will also be 4/5. And then we take the total amount, rates and insurance. How much is that? 1843. So 1843. And this one now will be minus because the prepayments don't belong to this year, they belong the following year. So we remove them. And the prepayments, you can see it's 150 plus 48. This is 198. 198. So we'll simply come here and less 198 like that. So we start with 1843 minus 198. You get the answer, and then you multiply by 4, you divide by 5. You will get 1316. So that is the figure that will be here. 1316, like that. So we are done with this. We are also done with this. Sundry expenses. The following expenses are to be apportioned. So sundry expenses, I believe we don't have any working on sundry expenses, so we'll just write sundry expenses and then we apportion it. Sundry expenses. So we just say 4/5 times, what is the figure for sundry expenses? Go back. Sundry expenses. Get the figure to sum here, sundry expenses. It's 5830. So 5830. 5830, like that. So 5830 times 4 divided by 5. This gives us 4664. So 4664, like that. That is the sundry expenses. Then let's move on. An amount of 6 million, including the factory wages, account is for the factory manager. Factory manager, we need to factor that it was not a direct cost, but it's an indirect cost because he's a manager. He manages the whole organization. So simply talk of the manager's salary at 6,000. Manager salary 6,000. So manager salary, how much is it? 6,000, like that. Then we move to the next item. The next item, the directors provide, no, this one doesn't apply, doesn't apply. I think we're done with this. So let's go back here and check any item that we might have left out. Raw materials, sundry, bank charges, it's not in the, this one will go to the administrative side, administrative. All the salaries, the administrative side, plant maintenance. This one I said it's supposed to be captured in the factory. Plant is the machines, those heavy machineries. So plant maintenance is 2194. Plant maintenance 2194. So we come here and say plant maintenance 2194. Then next is plant maintenance 2194. Next we have lighting and heating, we are done. Factory power 4512. They are very clear it's factory power, so we'll capture it as it is. Factory power 4512. Factory power 4512. Factory power 4512. Remember, we're only capturing what is incurred at the factory. And these one now are indirect costs, that's why we are putting them under production overheads or factory overheads. Then that's factory wages, we've already captured that, we've captured that. These ones don't apply. So with that information, I think we are good to go. We should have captured everything. So let's just get the total here. This is 200 plus 2040 plus 2728 plus 1316 plus 4664 plus 6,000 plus 2194 plus 4512. That gives us 23,654. 23,654. So get the total here and then bring it here. 23,654. Then get the total plus 177,476. That gives us 201,130. 201,130. Good. So 201,130. What is that 201,130? That is the cost of goods available. Cost of goods available for sale. Cost of goods available for sale. But then this is not enough because we still have there's something. Remember, I told you when we were starting that you now add work in progress. Work in progress, because work in progress is also part of the manufacturing. So we'll add opening work in progress less closing work in progress. So we'll have here WIP, that is work in progress, WIP, and then say opening and closing. So what is the opening work in progress? Opening work in progress we've been given in the question. This is the opening work in progress 11,532. 11,532. So come get that figure here, 11,532, and then closing work in progress is it's here. Closing is 16,490. So 16,490. So opening minus closing 16,490. This will give you 11,532 minus 16,490. That gives you 49,58. 49,58 negative, and then plus 201,130. That gives you 196,172. 196,172. So that is the total cost of production. total cost of production, and that marks the end of our first part, that is A. This is the answer, the end of manufacturing account. So manufacturing account for the year ended 30th June 2021, that is the answer, 196,172, with showing the total cost of production. It is this total cost of production that will now be posted or transferred to the trading account. So we've got the second part, which is statement of profit or loss. Now the statement of profit or loss starts from the trading account. We start with the trading account and then end up with the profit and loss account, and we'll be done. So it's good this question doesn't want appropriation, doesn't want financial statement. So let's go to the second part. Alfajiri Limited. Alfajiri Limited. And then you say statement of financial position. Statement of financial position. Financial position. And this is for the year ended. For the year ended 31st. Is it 30th? Let's get the date right. 30th June 2021. So 30th June 2021. Then we underline, and as it is our norm, let's have the three columns, shillings 000, shillings 000, like that. Okay, and we restrict the zeros. So the trading account simply shows sales less cost of sales, and we get gross profit. It's as simple as that. So sales, then less cost of sales. So we simply come back here and pick the sales. What is the sales figure? The sales is direct, you can see 244,925. 244,925. There's something, I think there was something sales returns. Yeah, sales returns is here. So since we have sales returns, we are supposed to, there's some working on the sales. So we'll have it in the inner column. So 244,925 minus 269. 244,925. So 244,925 like that. 244,925 minus 269, which is sales returns. Sales returns. So this is our working that we have. I hope I've gotten the figures right. 244,925 and 269. 269, let me just confirm. 269 and 244,925. We are right. So if you've gotten them right, our sales returns we sold, but the debtors returned, customers returned the goods back to us. So 244,925 minus 269. That gives us 244,656. 244,656, like that. So then we go to the cost of sales, and under the cost of sales we have opening stock. Opening stock. These ones are now just obvious. We go pick opening stock. Let's come back here. Inventories. Opening stock. But now this is a finished goods. We are talking about finished goods. We are no longer in the factory. So this is the finished good that we are talking about. 21,669. This is what we are interested in. 21,669. So 21,669, and we'll have it here. 21,669. Then add what? Purchases. But now purchases, we are not purchasing from any other source. Purchases, we are simply receiving these goods from our store, from our factory, which is now 196,172. And then we less what? The closing stock. We less the closing stock, and the closing stock is here, clearly shown. Closing stock of finished goods. This is the figure we are talking about. 24,627. 24,627. So 24,627, like that. So we less this. What are we getting? This is 21,669 plus 196,172 minus 24,627. This gives you 193,214. So 193,214, like that. 193,214. So we less this figure. This is the cost of sales. We less from the 244. So minus 244, 656. We get 51,442. 51,442. This becomes our gross profit. Gross profit, and it marks the end of the trading account. So we embark now on the profit and loss account. Profit and loss account, two things happen there. We add the incomes and gains, and we less expenses and losses. So just go back to the question and find out if we have gains, incomes and gains. If we don't have any incomes and gains, we go straight to the expenses and losses. So there we go. Discounts receivable, this again. So we already have it. Discount receivable 493. So we simply come here and add it. Discount receivable. Discount receivable 493. If we have so many, we might need to use the inner column so that we add and then get the total to the outer column. But if it's only one, just add straight. So let's continue. Let's check if we have any others. 15% debentures. Do we have any other incomes or gains? Allowance for doubtful debts. I think there was something. Allowance for doubtful debts is to be adjusted to 80% of the accounts receivable. We need to work out this. You know, if there's an increase or a decrease. If it's an increase, then it will be posted the expense side. But if it's a decrease, it will be posted in the income and gain section where we are now. So let's work it out. So accounts receivable, how much is accounts receivable? It's here, 26,409. So 8%, 0.08 times 26,409. This gives us 211,212. 2,112. 2,112. Yeah, weird figure. Okay, accounts receivable. Oh, there's something about accounts receivable here that we need to be keen on. Some finished goods which cost 5.1 had been sold to a customer at an additional profit margin of 57. But the customer had indicated that he intends to return them since they are not what he ordered. This was a credit sale and had been included in the accounts receivable. Some finished goods which cost 541,000 have been sold to a customer at an additional profit margin of 57,000. But the customer has indicated that he intends to return them since they are not what he ordered. This sale was a credit sale and has been included in the accounts receivable. So we just remove this whole sale. Some finished goods which cost 541 had been sold to a customer at an additional profit margin of 57,000. So it means here the goods had been sold at a total 541,000 was the cost plus profit of 57,000. This is the profit margin. So this gives us 541,000 plus 57,000. That gives us 598,000. 598,000. So the goods that was sold to this client was valued 598,000, and he returned them. We will assume that he returned them. So our debtors will reduce by. So what are we talking about? Accounts receivable 26,409 minus 598. That gives us 25,811. You see, we have taken this 26,409, value of the debtors, minus this which the debtor wants to return. So we will have 25,811. So it's this 25,811 that you are going to subject to 8%. So times 0.08. This gives us 2064. 2064. That is the value of the debtors. Now, are we interested in that? I think what we are interested in right now is simply if there is an increase or a decrease. Allowance for doubtful debts, 1381. And then you can see it's definitely an increase from 1381 to 2064. So it's not part of the incomes and gains. So let's leave it that. We'll come back to it. We're just ruling out the possibility of it possibly belonging being an income or a gain. So we continue the journey, and there is no any other. I doubt if there is any other. We are done with almost all this. Yeah, number 3 we are done. Number 4 we are done. Number 5 we are done. Number 6 done. Number 7, 8. Okay, 9. I think we are good to go. So that is the only income gain that we have. So since it's the only one, we'll come back here and add again, get the total. This will give us 51,953. 51,935. Okay, so let's come back here to expenses and losses. Expenses and losses. Okay, this is the last part. Once we are done with this, we'll be done with the whole question. So let's pick all these expenses and losses. Again, we might choose to start from depreciation. It depends how you want to look at it. But let's go step by step. So let's start with the depreciation. First things first, depreciation. So depreciation. And under depreciation now, we have real property. That one, no. Plant and cost, no. Plant, we agreed that plant was a cost that was incurred in the factory. So motor vehicle at cost, you can see motor vehicle at cost is 10,600. Accumulated depreciation is 6,100. So motor vehicle, that's our client. Fixture and fittings, our client. All these were incurred at the see motor vehicle 25, fixture and fittings 10%, and the other depreciation were considered administrative, so they were incurred at the business side. So we have motor vehicle and then fixture and fittings. Motor vehicle, then fixtures and fittings. And motor vehicle is at the rate of depreciation to be provided on a reducing balance. So motor vehicle is 25%, fixture and fittings 10%. So let's pick that. So motor vehicle, depreciation, motor vehicle, 25% off. 25% off. And then furniture and fittings, it's 10% off. So this makes it very easy. 25% and 10%. Yeah. So we come back here and we get these figures. They have told us that it's on a written down value. So what we mean by written down value is we don't work with this is the cost. So written down value is the value of that asset as at the beginning of that year. So it's 10,600 minus 6,100. 10,600 minus 6,100 for motor vehicle. 10,600 minus 6,100. So let's just go back and write it. 10,600 minus 6,100. 10,600 minus 6,100. This is 10,600 minus 6,100 minus 6,100. That gives you 4,500 times 0.25. This is 11.25. So we say depreciation here is 11.25. Then for the furniture, again, we go back to pick that figure. Furniture is 7941 2358. 7941 2358. 7941 2358. 7941 2358. I hope I've captured the figures right. 7941 minus 2358. So this will give us 7941 minus 2358. That is that times 0.1. So it's 58. So we'll just work with 58. 58. 558. Actually, it's supposed to be 558.3. So let's be specific on these figures so that we don't get messed up at the very end. So that is the depreciation. Now let's look at something else. 1, 2, 3, only plant, no. Allowance for doubtful debts. Now, allowance for doubtful debts. Remember this, allowance for doubtful debts. Let's come back here. Allowance for doubtful debts. Allowance bad and doubtful debts. Allowance for bad and doubtful debts. So what we'll have for allowance and for bad and doubtful debts is simply we come back here. We had already calculated it. Some finished goods which cost 541 had been sold to a customer at an additional profit margin of 57. But the customer has indicated that he intends to return them since they are not what he ordered. This sale was a credit sale and has been included in the accounts. I think this one will have to leave it out. Why? Because there's a word here that is not very clear. The customer has indicated that he intends to return. Has he returned the goods? The silent assumption here will be that he has not returned the goods. He has only shown the intention to return the goods, but he has not returned the goods. So we'll keep silent at that. If he will have returned the goods, then we'll have worked with this 2064. But if he has not returned the goods as it is, because we are being told that he has only shown the intention, so let's leave it at that. Let's work with the correct. I think we'll go this other direction. So we'll just work 8% of accounts receivable, which is 26,409, and then less the provision for bad and doubtful debts. So 0.08 times 26,409, that gives you 211.2. 211.2.72. 211.2.72. So this will be 211.2.72 minus 211.2.72 minus. Let's get this figure. Let's get this figure. This figure, where is it? Allowance 1381. So minus 1381 minus 1381. What do we have? Minus 1381. This gives us 731.72. 731.72. Good. So, So we continue with this journey of ours. So we are now here at this lighting and heating, then rates and insurance, lights and heating, lights and heating, then rates and insurance. Then you have sundry expenses. I believe we didn't put sundry expenses in our manufacturing account. Oh, it was all of them were portion. So we have the figures here. Just take 1/5 of these figures. We'll take 1/5 of these figures. So I'll not go back there. I'll just come here and say 1/5 of all these figures. So this is 1/5 of, 1/5 of, and 1/5 of. That's how we go about it. Remember, we were portioning the factory took 4/5, and then 1/5 was to be shared by the administrative side. So it will be 3256 plus 154. Sorry, 3256 plus 154. That gives you 3410 times, or rather divide by 5. Because 1/5 is divided by 5. So this is 682. 682. This was 3410, I think. Then the second one. The second one was 1843 minus 198. That will give us 1645. So 1645 divided by 5. That will give us 329. And then lastly, the sundry expenses. This one was direct from the question. Sundry expenses was 5830. So just come here and say 5830. 5830 and 5830 divided by 5. That gives you 1166, like that. Good. So we are moving at a very good speed, and so let's proceed. So the next thing is, if we are done with that, the amount of 6 million, that one. The directors wish to provide a final dividend which will bring the dividend for the year up 5 shillings per share. Let's leave that one out first. The debenture interest for the current year has not yet been paid. So the debenture interest, you simply come here and calculate 15% debentures. It's 15% of 20,000, which is 3,000. So the debenture interest, 3,000 shillings. Let's come here, then say debenture interest, 3,000 shillings. Debenture interest, 3,000 shillings, like that. Then next, go back. I think this is where we were. So debenture, inventories, I think now we are done. Let's go now to the sales sundry expenses. We are done. Bank charges 585, marketing expenses 4609. So bank charges and marketing expenses. Bank charges 585, marketing expenses 4609. Okay, let's go pick others. Bank charges, marketing expenses, advertising expenses 1716. Advertising expenses 1716. We are almost coming to an end. Advertising expenses 1716. Good. Advertising expenses 1716. Then we have advertising expenses. We captured that one. Has salaries 18,000. Plant and maintenance captured. Bad debts 979. Allowance we already, we are done with that. So salaries 18,000. Bad debts 1840. Bad debts is 9. We need to be sure this figure. Bad debts 979. Bad debts 979. So salaries, these are administrative in nature. Salaries 18,000. And lastly, bad debts. It's 979. So hopefully we've captured all of them, because we started with the additional information, then we went back to the question. I doubt if there's anything remaining. These are items to be posted in the financial position, so they don't have anything to do with this. So let's get the totals. 1125 plus 558.3 plus 731.72 plus 682 plus 329 plus 1166 plus 3,000 plus 585 plus 4609 plus 1716 plus 18,000 plus 979. That gives us 33,481.02. 33,481.02. So you bring them right here. 33,481.02. Then, of course, these are expenses, so we are going to less. So that minus 51,935. What do we have? 18,453. 18,453.98. This is our net profit. That is our net profit. Now, it is this net profit that you are supposed to now transfer to them, actually to subject to appropriation, after which will now transfer to the final books of financial position. But now the question is not so keen on the financial statement of financial position, and about the appropriation. Let me see. The question is also not so keen on on the appropriation. We can proceed with the appropriation. I think the question can provide for us something on appropriation. No, but it's only one. We only have this share capital, general reserve, reserve, revenue reserve, general reserve, interim dividend paid. So we can talk of interim dividend paid. Generally, the appropriation account shows the interim dividend paid, and the dividend provide for final dividend. Okay. I think let's show. Okay. I think the question is not so keen on the appropriation account. You can see the statement of profit or loss. They just wanted to know profit or loss for the year ended. So let's stop at that. Let's not give ourselves questions, answer questions which have not been asked. So these are net profit. This is the net profit. Let's stop at that. Otherwise, we'll have proceeded to the appropriation account and then the statement of financial position. But the question is not keen on that. So we stop at that. Thank you. Continue follow us, subscribe, share, and yes, click the notification button in case of any new worked out question. You will be notified immediately. Thank you and welcome.